Traders War Room proudly presents the daily video with the best trading and investing alerts anywhere on any platform. With up-to-date stock, chart, and market news, TWR is simply your one-stop shop. Monday Madness. Activate your 2-day trial of TWR All Access on the Discord platform. Stay tuned at the end for TWR Hot Products and Services. Comments from the front line. Today I pushed out the message to the TWR market warriors on send me your charts you want broken down and I'll cover them in this video. Ernie asked for Google Microsoft. Tommy wanted UNH. And Hunting wanted Shop and PayPal. So let's break those down real quick before we get into the video. All right, so first up, Microsoft. Let's talk about it. Battle zone in purple right there, that 282.39, 278.73 area. Basically, we want clear and decisive closes above the battle zone for continuation either to the upside in blue or the downside in red. Remember, this thing absolutely exploded from like 260s not too long ago and just ran through 270, 280, 290 based off of that artificial intelligence buzz. That's kind of losing some steam right now, and a lot of analysts have this underwhelming or coming in line with expectations, which should push the price on it down further, basically from profit taking. All right, let's talk about Google. They also have earnings coming up. Battle zone again in purple. Now, Google has issues with margins, okay? It seems as though they haven't put in much investing into the artificial intelligence, even though they were kind of the industry's leader in the artificial intelligence. But I think Google is trying to be more on the safer side. Like with all the artificial intelligence buzzing going on, a lot of them are getting pinged for, you're moving too fast, it's not safe enough, all that stuff. Google kind of wants to be the more responsible parent of the artificial intelligence revolutions. But I do think that they're going to suffer on their earnings. You're kind of got some sideways movement where we peaked out, a few weeks ago, and we've bottomed out, and we just haven't been able to keep the steam up. So anything of a solid close above the purple or below the purple, we're looking for continuation. I'm more bearish on this one. I think they're going to underwhelm on earnings, and we fall down. UNH is a beast, and it's fairly reliable and fairly safe. We step laddered down a little bit from its previous highs in the 539, right? Almost hit 540. We step laddered down. I think we're finding some consolidation and support down here at bottom. We have a double bottom starting to form, or the W formation, which you see typically when you see this type of formation, the next move is up. So we're looking for continuation from here, a close above the battle zone right there in purple, and a push through the 500s, eventually leveling out closer to 510 or so. Now this will take some time, but I do think that we break from this level and we break to the upside, and we could easily get a $4 to $5 movement in the near term. Shop kind of moving sideways, and battle zone right here, 48.67, 47, right? So we're looking for closes above or below for continuation. I think that Shop is probably going to underwhelm, and we're probably going to head lower. I wouldn't be surprised. We've already lost our short EMA, our longer EMA, and we're approaching our 50. So I do think we step laddering down, and we're going to probably break this support level that we have here, and we're going to head down to that 47 with eventual push and retest of the 45s. PayPal, fintech's, baby, darling, used to be, a favorite player. It's still the huge and the biggest one dealing with the fintech revolution that we have. Right now it's kind of gotten beat up a little bit. We're starting to see a little cup and handle forming, which is always a good move for PayPal. We could see some more downside pressure. However, if the cup formation holds water, we should be pushing to the upside, and we could easily pop to $75 sooner than later. So I'm a kind of 50-50 on this one, leaning more to the bull side as long as we can hold this cup and handle formation and we creep up to the upside. So keep a lookout for this one, because when this one pops, it likes to pop quick and it likes to run. So you can always catch that run and make some decent money for about a $2, maybe $3 move to the upside. Alert update. Light day in the market, but didn't mean we made money. However, I do want you guys to understand that in this current market, you have to be okay with smaller gains. And the reason is market chop with low volatility. You're probably like this. But basically, what we're looking at is, and I described it here, we have this choppy market, but when the VIX is decreased, the dramatic shifts that we're looking for to give us those big gains on the underlying assets are not present. And so it's going to be choppy, and we're going to have a lot of ranging sideways motion. So we need to be okay with 10 to 20% gains. Now look, the 100 and to 1,000% gainers will come, but we have to be patient as market warriors in this choppy and unvolatile market until the volatility comes back in our favor. With that said, look at this trade here, 409 put, 25 April. We went in at 60, took our $5. Now look, that may not sound a lot, especially if you're in like one trade, right? Oh, $5, big deal. But imagine going into this with 20 contracts, okay? You're over there making some pretty decent money, okay? So definitely it's all relative to your risk and your size and your tolerance that you have individually. Nice trade right here. We took the MU put because of that China news with the chips, and we went from 95 to 106 real quick, $10 per contract, easy peasy. Quick trade on the SPX, going in those 41.60 calls, taking profit at 195, good for $30 profit overall. Nice trade on Microsoft right here. Entered those 290 calls, pushed in at 310, came out at 35. That's good for 40 on the day. MTA was killing it, came in with some Tesla trade, riding some of that downward momentum, push in 360, full out $4. And I got to highlight our sports betting guy, man. He is on fire. Yesterday had 2 for 2 sports betting. Definitely, if you're not on the TWR platform and you're not paying attention to sports betting, our guy Tech, he's fantastic and he's making people bank. Sports betting is extremely hard. One of the most successful sports bettors out there only had a lifetime average of 57% win rate. So sports betting is not like other type of investing strategies and trading, stuff like that. It definitely takes a lot of time and effort to really dig through, and our guy Tech is the best, man. He's the awesome, and you can only get him on TWR, baby. $100 to $1,000 per day is possible as a trader's war room market warrior. So quit wasting that money that's not making money and join TWR today. All links are in the description. Hot off the press. Top news, of course, was the First Republic Bank crashing with their earnings. Absolutely got demolished. It showed that, possibly this, resurgence in the banking crisis, quote unquote, isn't as bad as you thought. Well, these regional banks are starting to have a little tough time and it's starting to come out. So a lot of analysts think that we're hitting the next wave. It comes in waves, right? At first you get, bam, bam, it hits you hard and you start to recover. You think everything's okay. And then the next wave hits you a little bit harder because now you just got more shoes that are dropping. So we're definitely paying attention to that, but watch for this to pretty much continue on its downward spiral, because if you guys haven't paid attention to SVB, look where SVB was at and where it came from, okay? So these are how fast these regional banks can move. ServiceNow stock, JP Morgan and Chase are looking at it. They're putting ServiceNow on the watch list, okay? So that's some big analyst movements. They got high hopes for ServiceNow. Definitely doesn't mean anything if we hit the recession, but ServiceNow, once you can get this at a little bit lower price, right now it's a little inflated. I think you can get a better price, but this is one of those stocks that is primed to go in. This is, one of those 3 to 5 year type of trades where you want to get into this sector and you want to eat over time. Okay, so definitely paying attention to ServiceNow and other type of sectors like that, because those big tech stocks that we've been used to, the FANGs, okay, a few of them are still going to be key leaders moving forward in the future, but you're starting to have some new big boys come knocking at the old G's, doorstep saying, hey man, it's time to retire, brother. I need to take the crown from you and stuff like that. So we'll definitely pay attention to how that struggle plays out. We're looking at BJ restaurant stocks cooking up. Restaurant stocks as well, as far as a whole, have been doing fairly okay. Now what you're starting to see though is that a lot more of the More expensive restaurants are doing well. The fast food chains are doing well, but the in between, the kind of the, sort of casual dining ones, they're starting to struggle a little bit. Okay. So the, expensive people are still going out to the expensive restaurants. And then other people, the majority of the people are actually averaging down, instead of going to say like Texas Roadhouse or something like that, they're buying steaks at Sam's Club, cooking them at home, and then they're getting fast food for their eating out expenditures because it's a little bit cheaper on the pocketbook. And next, IBD has their list out for the best growth stocks to watch. And this is interesting, list because you're not seeing a lot of the old school stocks out there. Okay, you're starting to see these new smaller cap stocks that have kind of started doing fairly well. Their fundamentals are starting to come up. So the reason I want you to hint on this one, okay, is because you want to start paying attention to the rotation of the fundamentals and finding out some of these small caps that used to be, no names or something are starting to make runs on the big boys because their fundamentals are solid. They're able to kind of counteract some of the recession fears, and they have, solid growth trajectories that rival the big names, because a lot of these big stocks, they're not going to really have potential to move up any more than they've already ran. Okay, in fact, they'll probably cool down. But these other ones that have been beat up so hard, we're looking at the ones that are above 50s and 60% beat up from their previous highs. You want to pay attention to those, especially if the fundamentals and the balance sheets are solid, because those are the next ones to explode, because people are looking for other stocks to rotate their money. And when I say people, I mean the big money, the wealthy money. The institutions are looking for the next thing to make 20% or better on their investment. Hot trends. Here's your overall summary. Okay, so the market direction today was bullish. The leading index was the DIA. The market momentum, however, is bearish, and the hottest sector is energy. Here's how the SPY played out today. Classic double top and then bottoming out. So definitely easy way to make money going both ways. You play the double top, you go to the short side, boom, it bottoms out. You play the double bottom, you play it to the top side, and you were able to make money going both ways on the SPY today. The Q, fairly similar. After the bell, it definitely hit that downward trending spiral, kind of bottoming out about the same time that SPY did, and slowly trickled back up to the bell where it ended flat on the day. Market overview of the big boys so you can see what was moving and shaking the market today. Biggest gainers, definitely, guys, if you're not paying attention to these penny stocks, you guys need to pay attention to the penny stocks. And yes, penny stocks doesn't mean you're actually in the penny. It's going off of market caps. So you're looking for stocks that are under 5 billion of market cap, the small caps, and these are starting to heat up. Okay, so you got to pay attention because they're giving you some spectacular movements where you're able to make some very good money. Top losers, we'll be looking for some reversals off of the knee-jerk reactions. Roblox is one of those. It could have some continuation to the downside, but it likes to spike after knee-jerk reactions to the downside. It likes to pop back up, so we'll look at it. It also has earnings coming up later on this week, so maybe it gets a run into earnings. Chinese stocks not doing so well. BABA looking pretty rough. JD looking rough. PDD looking rough. MU, we talked about MU earlier. You saw it in the alert. Okay, so while we're riding this China momentum, if you keep hearing negative news with the U.S. and China coming through the market, you got to assume that these guys are probably going to dip a little bit further, and big money is not going to touch these. So definitely some good opportunities for some short plays on the Chinese names. Sector rotation, that's a buzzword. You keep hearing sector rotation, okay? This is where big money is starting to fluctuate and move money around from sector to sector, okay? Before, we were seeing communication services and technology really anchoring up at the top, but look what it's doing now, okay? It's starting to level out with the healthcare and utilities sector, which seems to be wanting to pop back up, and you're starting to see a resurgence of the consumer staples and the consumer discretionary, as well as the SPY ETF. So definitely paying attention to where the big money is flowing so we can catch some pushes before they happen and make some dramatic money. Sector performance right there. Energy materials, top leaders. Technology and real estate, biggest laggers. Here's your flow, leaning more to the bull side, so definitely some money is flowing into the bull side of house. But I don't want you to get hung up on this because this could be classic bull traps, okay? A lot of this institutional money pushing to the bull side of house, waiting for the big pop, and then they sell out very quickly and they sell full positions and leave bag holders hanging because they can't do their day trades because of PDT rules. So definitely paying attention to the way the flow goes, and you got to have that head on the swivel so that you're ready to attack. Here's your dark pools. Now, I want you to start noticing a couple of these names are starting to kick back in there. NVDA, okay? When you start noticing NVDA creeping up above, the staples of the Apple and the Meta and stuff like that, what usually happens is as these lower names, SPY and the Q are usually up at the top anyways, but as these lower names start to creep up towards that top level of the Q and the SPY, this is usually when buyer's exhaustion happens specifically on the dark pool. So watch for reversals on these stocks, especially the ones that have taken off like a rocket ship and are kind of leveling out a little bit, okay? Everything can't go up and just keep going up without people taking profits and lowering the price back down. So just watch those for the reversals so that you're not holding heavy bags, and we want to catch these things on the dips so we can dollar cost average in and get our positions long. Nice chart with statistics. This basically gives you an overall understanding of the bid-ask spread, okay? And the amount of volume that's coming in where people are buying above the ask or at the bid. And there's a term I want you guys to start to realize, okay? Slap the ask, okay? Whenever you hear the slap the ask, that means something bullish is happening and people feel confident about continuation, okay? When people aren't slapping the ask, they're putting limit orders in, they're putting orders in at the bid. They're unsure about the market continuation and they want to try to get the best price for their money, okay? So that's actually a bearish type of signal, right? Slap and ask, extremely bullish. People are like, man, I don't care what I get in at. I got to get it now. And boom, I'm in, and we're going to ride this to the moon, okay? Bringing it back to limit orders and also bringing it back to the bid orders is a bearish type of tendency because you're unsure of the direction or the continuation to the upside. I like this one mainly for the bottom portion, okay? The SMA 200, the 50, and the advance and decline. So if you guys paid attention to my tech video I put out yesterday, this goes over that. So I'm not going to go into detail on this because I went in about 25 minutes on that tech video and put a lot of research into that. So definitely check that video out if you don't quite understand the significance of the SMA 200, the 50, or how advancing and declining stocks give you an overall picture of market breadth and direction. Unusual options. I like TTWO. GM, I'm not so sure about. I don't really like that one. FRC, people that went long on that are definitely SOL because that thing is absolutely getting demolished right now. So sorry, FRC call people. But the puts, you guys will probably wake up pretty happy tomorrow making some money. UPS, they got earnings coming out. FDX did fairly well on their earnings, okay? So if they're similar in nature and got probably similar business models and stuff like this, FDX gapped up pretty hard. So you could be seeing a significant breakout on UPS. And I got their chart here in a moment, and I'll be showing you about the UPS in the chart section. But I definitely like this one to go forward. Highest implied volatility. And why do we like implied volatility? Well, because implied volatility is what gives us our dramatic push so that we can make money, both going long and short. So definitely we want stocks that have the implied volatility. Otherwise, we're not making the dramatic pushes. We're just trickling and making nickels and dimes, man. We're trying to make dollars out of 15 cents, y'all. So definitely we need that implied volatility, because if we're not making the dollars out of 15 cents, then we're just taking the 15 cents and trying to reinvest that to make another 15 cents until we're able to get that dramatic push to the upside. Here's your top open interest change. And what's significant about open interest change is when people are still in the trade, okay, they have confidence that the trade is going to mature eventually going into their position long or short or whatever it is, but going into the position for a certain amount of time, okay? When the open interest changes in the trade, it means that people don't have the confidence that's going, so they're starting to put, limit sells and limit buys and stuff like this in so that they can close out their position at certain levels because they're not sure about the direction and they're uncertain about the market as a whole that includes, global economics, that includes the Fed stuff, all that type of stuff come into play. So when you see significant changes in open interest, that tells you that a lot of people, the sentiment is rather low on continuation on that particular trade direction. And here's your top movers and shakers that everyone's trying to pay attention to. FRC, okay, of course, it's on there. We got Cliff, it's on there. KO, people are paying attention to KO, especially with Pepsi earnings coming up. So definitely Adobe is on there as well. We got some big movers and shakers, and USB as far as one of those banking names are concerned as well. So regional banks obviously are highlight. We're also starting to see some other interesting movers and shakers. The Fox is on there because of that, issue with the lawyers, and they had, the settlement that cost them billions of dollars. Okay, that's a huge movement and stuff like that. So we're definitely paying attention to a lot of these, and I got some of these in the chart section here in a minute. Stocks I like. Here's how the alerts will go. Purple line, that's the bow zone. That's where the fight is going to happen at. And then the blue line, on a break from the battle zone, that's where we're looking for follow through to the bull side. And the red line is going to be follow through to the red side. All right, so let's talk about SPY. We got the battle zone, okay? Listen, I think SPY's probably looking for some bearish tendencies based off of these earnings that are coming in line or underwhelming, okay? There's really no surprises with these earnings. People were expecting them to be lower, and the ones that are in line are still getting beat up, and the ones that come in and they absolutely get demolished, bad news is bad news now. Remember how it used to be bad news was good news was bad news? Well, it's starting to rotate back into good news is just okay. Great news is great news, and bad news is bad news. So we got our triggers right there. We're looking at the battle zone. Anything significant above or below those triggers, we get the confirmation continuation to the upside, and that's what we'll be looking to trade come the bell when it rings tomorrow. McDonald's has been on an absolute tear, and it's like the little engine that could, but I think we're about to run out of steam, okay? So I want you to focus on that red line, okay? The red line is its previous level where we had the previous breakout to where it's at now currently at the purple line or the battle zone, okay? The orange line is that distance between the previous breakout and, the most recent breakout before it ran into where it's at currently. I think that it's about the same distance between the orange and the red and the purple, that would be a likelihood of it coming down off of, people taking profit, underwhelming earnings or earnings in line, but maybe forward guidance being a little soft. We can probably push down and eventually attack that 290 level, which would be in line with the movement that we saw previously on the last breakout. So I am bearish on this one. I think going out, pushing out a month or so, going with those 290 puts will make you some money. UPS, I'm liking it. If UPS gets a similar move like FDX did, we'll possibly gap up on some earnings, and we're looking to possibly break out of this 198 level. It's been here before. If you go in a further out chart, looking at a daily or a weekly chart, we're looking at a double top on those. I think we break to the upside, and we're able to get a decent push, probably a $3, maybe $4 movement to the upside before we start cooling down. Now, if we don't break and we get, in line or underwhelming earnings or some concerns with forward guidance, then we're probably going to go hit downside. Now, UPS doesn't like to dip too much too quickly, so it'll be kind of a slow drip at first until people start to buy in on it. But I do think that we could bottom out around that 190, 189 area. Pepsi. I think Pepsi does fairly well. KO was kind of, it popped, but it wasn't as poppy as people anticipated because of their pricing power. But the difference between Coca-Cola and Pepsi is Pepsi not only has some of the most popular drinks, just like Coca-Cola does, but they got the snacks, okay? And people are still drinking, they're still snacking, and they have pricing power. So I do like Pepsi for a push to the upside. I'm looking for a break and eventually going to retest that 188 area. GE, I'm not a big fan of GE. I do think that we possibly could see some of this downward trending pressure. However, on the broader market, when you look at it, we got a cup and a pretty decent handle forming. So, we could break out from this bullish pattern. It all depends for GE on earnings. Okay, of course, GE has the other healthcare sector that they split off that's doing really well and could have some definite sentiment push on this as well. But we'll see what happens with GE and earnings. Premiums are usually not too expensive. So we probably can get into this if we start to get the notice of decent earnings when they report in the morning, and we'll try to ride this. But if they get the good push, then we're probably looking at, 102, maybe 103. But if they aren't, doing well, anything, less than, good, then we're looking for the pullback to the downside, and we probably could eventually come down and retest this $95 range. And Spotify, man, I gave you a whole bunch of charts at the front of this video as well, so I'm going to stop at Spotify. Spotify, I'm bearish on this one. I don't think that they have the numbers on this particular earnings. I think that people are kind of giving up on their Spotify account because they've bundled into other things like, Apple Music or, Amazon Prime and stuff like that. So I think that they're going to underwhelm, and we probably got some downtrending pressure. I think 128, even maybe 125 on some really negative earnings reports sounds about right, but definitely downtrending pressure in the long run. Even if we see a spike to the upside, I don't think we hold it for that long. We've come up there many times. We just couldn't hold it, and we're starting to retract below our, shorter moving averages. I think we keep that momentum to the downside and continue going down. Upcoming events. Traders War Room is your one-stop shop. Try our TWR one-to-one mentoring. Does the market have you feeling like this, or wanting to rip your hair out while you watch your account dwindle? If that's you, then Traders War Room has you covered. Our one-to-ones focus on you as a trader or investor. The Zoom session connects you with a TWR professional. Whether we're covering charts, developing a plan of attack, or being strategic and deep diving on the how, why, and execution of trade plans. TWR one-to-ones will give you the confidence to attack, conquer, destroy, and make the market bend the knee in 2023. Join TWR and bow to no one. Book your session today. The link is in the description or on the website at traderswarroom.com. Let's go to war. Tired of all the dings and pings on your current trading platform and feeling overwhelmed? No need to have that, guys. Check out TWR Instant Message Alerts. Less noise, just alerts. Guys, if you are tired of all the dings and pings interrupting your trading session, or you're just feeling overwhelmed because there's just too much information, okay, we got a simpler fix for you. Check it out. We send out alerts. 2 channels. You got a chat channel and you got an alerts channel, and all you're going to get is high quality trade signals and alerts. And definitely, if you are interested in this because you're currently feeling overwhelmed or you've had a bit of downward progression in your trading style, come over and check us out, try it out, and see if this works for you, getting you back on track, okay? The link is in the description, or you can always DM me or hit me up in an email if you want more information. But definitely, TWR Instant Message Alerts are less noise, just alerts, just for you. Activate your 2-day trial of TWR All Access on the Discord platform. We cover it all at Traders War Room, whether you're looking for stocks, options, futures, Forex, crypto, or even sports betting, or you want real-time alerts, live trading, algo signals, or even if you just want to be part of a community of like-minded investors to grow, learn, and share together as a team. Something for everyone at Traders War Room. Activate your 2-day trial today and go to war with TWR. The market is our war zone and stocks are the battle. Join TWR and let's go to war. Make the market bend the knee in 2023. Join Traders War Room and bow to no one. Let's go to war.